Welcome to a new episode of the EU Finance Podcast, where we explore the ideas shaping the future of finance in the European Union. Your usual host, Aidas, is taking a break, so today, apologies, you're stuck with me. We're diving into a topic today that affects nearly everyone: savings. Europeans are actually among the world's top savers, yet many struggle to earn solid returns. One key reason? We tend to invest less in shares, in bonds, and in financial markets. Recently, the European Commission unveiled a blueprint for something called savings and investment accounts, and they are aimed at making investing more accessible and more attractive. And one country that's already seen remarkable success in this area is Sweden. And today we're joined by someone who knows all about it, Niklas Wykman, Sweden's Minister for Financial Markets. Minister, thank you so much for joining us. Savings and investment accounts are more popular in Sweden than anywhere else in the EU. In Sweden, you call it the Investment Savings Account, or the ISK. It was introduced, I gather, back in 2012, but it built on decades' worth of creating a general, bigger investment culture going all the way back to the 1970s. Could we kick off by telling our listeners a little bit what exactly is the ISK and what motivated you in Sweden to create it?
It is just a very easy way for households, for families to participate in the financial markets. You can do all the businesses you want. You could buy and sell how much you like, and it's all pre-printed in your declaration sheet. So it's a way of making life more simple for people. You don't need to spend hours and hours in thinking about am I reporting the right information to the tax authorities, because everything is pre-printed and it's subscribed by those who are really doing the businesses, not by the households themselves. So it's a way of making it easy, and on top of that, it gives some tax incentives to use it. So it's a simplification process, and it's tax incentives, yes. I'm trying to say, yes. For households to participate. So it's not a financial product in itself. It's just a way of making life easier.
And so, thank you. And as you've just touched on the tax incentives, it's one of the...
That's the word.
Yes, the tax incentive.
I have so much problem saying, I don't know why.
No, one of the things we wanted to talk about is it's actually, that is seems to be one of the things which makes it work, the ISK, is the fact that you've provided these tax incentives and, as you said, very simplified tax processes so that it's easy to report to the tax authorities. And I think there's no capital gains tax in Sweden. And all that seems to make a lot of sense. But actually, some countries, when you talk to them about investment savings accounts, they're worried that if we bring forward tax incentives, their tax base reduces and therefore their revenues may be less high. So if you were in the coming months discussing this with one of your fellow ministers in the ECOFIN or elsewhere, how would you reassure them on this point?
Well, first of all, there is a capital gain tax in Sweden, just not to confuse the listeners. It's 30% capital gain tax, statutory. But if you have an ISK account, you pay a small share in tax of what you're having on the account instead on a yearly basis. So it's like this box model, if you're into tax theory on how to tax it, which makes the effective taxation approximately a bit below 20% of your holdings on the account. I would tell my colleagues that if people have their savings in bank accounts, they probably earn quite a low interest rate. And even if you tax that interest rate quite high, the revenues might not be that big. But if households instead are active in the financial markets, they earn a higher return on average over a longer period of time. There can, of course, be years with lower earnings, but on average, a higher return than you receive on the bank account. And if you tax that somewhat lower, you would probably still have higher revenues. So from I'm quite much of a hawk when it comes to fiscal policy. Swedes were known to be very to safeguard our public finances very much. But I would say from that perspective, I would not be worried if I were one of my European colleagues. On the other hand, I would perhaps even see it as an opportunity to, in the long run, increase tax revenues, because typically you earn more on the financial markets than you do on just having an interest rate payment from your savings account. And then even though the tax rate itself is somewhat lower, if the return is much higher, you will still benefit from that if you're responsible for public finances.
No, indeed. Well, I would be convinced anyway.
That's good. That's a start.
It's a start.
Lots
more to
lots
go.
of work to do.
And if we dig a little bit deeper into how the ISK actually works, what do you think are the features? So you mentioned some of them, the fact that it's a simplified reporting to the tax authorities in particular. But what are the other features you think make it appealing for Swedish people in general? And in particular, those we're all trying to get hold of, the younger savers. How do you think it encourages them to start investing? So yes, what do you think really are the other reasons behind its success over the years?
Well, first of all, I mean, the ISK account is not the only cornerstone of our success. There are lots of other things to it as well, but the ISK account is very important. And we already discussed the simplicity, that you don't need to spend any time on declaring everything you do, because it's pre-printed on your declaration sheet, so it's very easy to use. Mm-hmm. The second thing we already mentioned is that it's tax incentivized,
yes.
The word I tried to say before with not so much success. That is, of course, important, especially if you want to introduce it in a country where citizens are not used to own shares and funds. Perhaps you get a little bit more interested if there is if it's incentivized to some extent. And then I would say also, which is important, that there are very few restrictions put on the account. You can buy and sell basically everything that is traded on the market, which is a huge advantage. You can buy something Swedish, you can buy something French, you can buy something American, and you can put lots of different financial assets into the account. There are limitations, of course, but the limitations are it's very few limitations.
And just on this point of geographical restrictions, because it's a very interesting one and not a choice that every other member state who has an investment savings account has made. Some of them have tried to impose geographical restrictions, as you say, so not allowing people to invest in shares or bonds or financial markets wherever they choose to. So why did you make that choice? And actually, second part of the question, the interesting thing in Sweden is, even though you've made that choice of giving total freedom to people on where to invest, there's actually a very strong home bias.
Yes.
So how do you explain it all?
Well, I worked to the Minister for Finance back in the day as an advisor on tax policy, mainly back in the days when we introduced the account. And the reasoning back then was something like this. We are doing this because we want to increase the pool of investable capital. I mean, that's the idea. We want households to earn a good return on their savings. In Sweden, we normally say savings when we mean investments, because culturally it's very close to each other. We don't really distinguish between the concepts in Sweden. For a typical household, savings means investments. That's a difference, but it's important to underline it so everyone follows. All right, and how do you do that? And our best guess was make it as attractive as possible. And if you start to exclude investment opportunities from the account, it will be less attractive to use. And I would say, both from a strict, almost mathematical point of view, you want to earn the highest return. And if you exclude some of the investment opportunities that might earn you the highest return, you might not be so interested. And you asked before, or in this question, how do you attract young people to invest, for example? And then if many of the corporations you read about in the media, some of them might be American or elsewhere, and then you start your account, and then you find out that you cannot invest in them, then perhaps you get bored and you download a game instead, or something else, or you don't use the account. So to really make sure that it is in the household's interest to use the account. And then, as you mentioned, we don't have a problem with underinvestment in Sweden. I mean, our stock market, it's approximately 1% of the world stock market. And Swedish households, they have about 40% of their equity investments or savings, as we say in Sweden, in the Swedish market. So there is an enormous home bias. And I think that will be the case. It will be my assessment that would be the case in Europe as well. Because
naturally, in fact, you don't need to impose it. It will naturally happen.
I mean, if you include lots of people, if you succeed in that, if almost everyone hold equities are active in the financial markets, you will have a home bias, because of course what will you primarily buy? Well, the corporation where you work, or where your wife work, or where your parents work, or that is active in your hometown and that you read about in the newspapers and so on. So I wouldn't be very worried. On the other hand, if that is what it takes to get France, Italy and other countries to be interested, well, we don't want binding restrictions on our account as well. But if it is what it takes for some countries to make people convert some of their bank deposit savings into more growth-promoting investments, well, I understand that perspective as well. But from an empirical perspective, is it necessary to do so? The answer is definitely no.
When you look at so better returns for the households, greater pool of capital all round, and people get to choose really, and in the end they end up often choosing their homegrown companies. That's what they know.
I'm sorry for the long and
I think it's again. I think you'll be ready to convince your fellow ministers in a few days' time. You mentioned this extraordinary number, which is that nearly 40% of Swedes have invest in financial markets, which is an extraordinary high level.
I have to correct you. 40% they have this ISK account, but approximately everyone that once had a job in Sweden are invested in the financial markets through the occupational pensions. So it's even better. But 40% have such an ISK account.
We had a slightly lower figure. We had 36%, you see, but I believe nearly 40%, which is an extraordinary figure, and I think incomparable to anywhere else across the EU. And the extraordinary thing is that, investing, of course, in shares and bonds always involves an amount of risk, and you can, even though over time all the evidence is that you will make more money than leaving your money in a savings or deposit account, you can lose money. And we know that overall Europeans have a tendency to be quite risk averse. It's one of those standard comparisons with the Americans or other, whether true or not, but we're considered as being relatively risk averse. What did you do to kind of reassure people on this aspect of, there is an element of risk, you may lose? How did you convince people?
Well, first of all, I think other countries should be quite optimistic about their abilities to do this, because Swedes are not primarily known as very risk-taking people. I mean, we are almost on the opposite. On the opposite side, I would say we're very risk-averse in many aspects. We try to build a very safe and secure society, a very strong social welfare state, for example. So we don't necessarily are risk junkies to any larger proportion in a way. So. But you gradually, of course, need to build confidence and trust in the market. You need to have consumer protection. You need to have you need to govern your corporations wisely for the public to trust them. A cornerstone in this in Sweden has been the inclusion of the social partners, the trade unions especially. As a Swede, it's quite surprising to hear the debate in many countries where the trade unions are against, for example, a pre-funded pension system, or at least a partly or to a small portion pre-funded pension system. Because in Sweden, I would say we perceive it as a question about economic efficiency, of course, but even more so a question about social cohesion. why should only the most educated or the most interested people in finance, for example, why should only they have access to the return on the financial markets, and why should lots of people, blue-collar workers and people who are, you might be a medical doctor, you could be very well educated but not very interested in finance. Why shouldn't everyone else be included in the financial markets and have the better long time return? So I would say, thanks to the close cooperation with the social partners, that you have people at your workplace that discuss with you, you should spend 15 minutes looking at your pension savings and so on. That might be a more trustworthy system than some financial guy with a tie working at the bank telling you what to do.
Buying in a wider spectrum of society and societal actors in the...
Yes, I mean, you have to see it long term, and you have to see this almost as an organic process. When you start to include more people and when you start to build trust in the society without outside those working strictly with finance, for example, it's in Sweden we often use the saying, I don't know if you use it in English, I don't think so, that it's a piano that eventually will play itself.
I don't know it,
no,
but it works well.
That's why I used it.
No, it's very telling. It's very telling.
And soon it's Christmas, and we have a Swedish saying about it's not much to hang in the Christmas tree, which is famously translated to English with very bad success.
Fair point. And just as part of that, do you think the very high levels also comparatively in Sweden of financial literacy, and the focus you've also put on financial education, do you think that's also played a role, so that from a young age people, as you say, it's organic, it's part of the life that they're going to lead?
Yes,
understand it.
To some extent, yes. I mean, having a good education system, having good schools, having good universities, and so on. Of course, it's important, but I wouldn't say that it is the most important thing for having a high level of financial literacy. It is a learning by doing process. And of course, we support a European or any domestic agenda trying to educate people, being more financially aware or having a higher knowledge. It is good for numerous of reasons, of course, having a well-educated population aware of risks and advantages. But for me, my assessment is that it boils down to a learning by doing process. Because some people, they are interested in economics and finance, growth, entrepreneurial activities and so on. And if you only do theoretical education, I mean, you will leave them with even further knowledge, and you will leave out the rest. Even if you, I mean, if you're a medical doctor or a construction worker, I mean, you choose your occupation out of other interests and skills. And for them, I would say that the most important thing is a learning by doing process. And then, of course, having occupational pension schemes, having pre-funded pension capital. You don't need to pre-fund your whole pension system, but if you have a 100% pay-as-you-go system, perhaps you can transform it to a 99% pay-as-you-go pension system and pre-fund 1% of the capital. But that will accumulate a lot of capital, and it will create an interest and a knowledge among trade unions, labor workers widely, of course. So I think you need to work, or my assessment is that you need to work with this learning by doing process, rather than just theoretical exercises.
Very interesting. It's a very holistic, really, approach that you've got. Very final question. Looking ahead, where do you think we'll be in 10 years in the EU? How much do you think we can collectively develop more of an investment culture throughout the EU?
The more we are talking about the real problem, which is that we have too little investable capital. We have lots of savings in Europe, but very much is just on bank accounts, deposit accounts. making quite little, I mean, I'm not saying no use, but a little use for transforming ideas into growing corporations. And the more we are discussing that problem, that is what we want to solve. And we want to solve it by giving households, working families, better returns on their savings. That's the problem is we have too little investable capital. The solution is providing working families with better returns on their savings. That is what we are trying to achieve. And the more we address that, and the less we are discussing about all those technical issues and arguing on supervision and anything else that might be or might not be so important for the objectives of our discussion, which is to increase the pool of investable capital by providing working families with better return on their savings. And if we're able to do that together and push for national domestic reforms on pre-funded pension systems, and also, of course, introduction of those saving investments account or ISK accounts, the better. And
as getting our hands dirty.
Yes, and as soon as you have more working families, more households participating in the financial markets, the more relevant, of course, it will be for ordinary news programs and so on to report on the economy. And as I said, it is about this piano eventually almost playing itself.
In time for Christmas.
In time for Christmas, with one, of course, important exception. And I just need to mention that because it's my main duty in my work. Of course, you need to safeguard financial stability always, because if you lose financial stability, you lose trust. Yes. You lose money in the short term, and you lose trust in the long term. So you need to safeguard the financial stability
as a basis. And one just final bonus question, as we're lucky to have you here. As you said, the whole objective is to also increase the pool of investable capital, which is the objective of the Commission's Savings and Investment Union, which is an umbrella for many different initiatives, including the investment and savings account. Within all those initiatives, apart from the investment and savings account, what are the other ones which you would think are top priorities if we want to progress and change the amount of capital that we can invest in the EU?
It's, of course, to push for any initiative to reform pension systems, because what we need is investable capital that can bear uncertainty and losses for a long period of time, but with the average outcome of having a high return. And pre-funded pension systems are the best to do that, or among the best. And that is also where you can find lots of funds or lots of money, to be very clear, because you need many people to participate, and if many people participate, you will very rapidly accumulate lots of capital. So we need to reform our pension systems throughout Europe. And I'm not talking about, I'm a conservative politician, so I'm not talking about making a revolution. But if you have a 100%, as I already say, pay-as-you-go system, and you can make it a 99% pay-as-you-go system, and include, for example, the trade unions in figuring out how to make that other 1% to grow as much as possible, not being this guaranteed savings, but being a bit of a risky saving, we will take a big leap forward.
Thank you. Well, the Commission will be bringing forward proposals on pensions in the next few weeks. So a very timely point. Thank you very much, Minister, for taking the time to join us today.
Thanks so much for listening.
As the EU works towards a more effective savings and investment union, examples like Sweden's ISK remind us of what's possible when policy meets people's everyday needs. The Minister today highlighted some of the ingredients of Sweden's ISK. It's simple, it's easy to use, there are tax incentives, and he basically said, give it a go, learn by doing. You've been listening to The Future of Finance. If you've enjoyed this episode, don't forget to subscribe and share, and we will be back soon with more conversations on how the EU is shaping its financial future. À très bientôt.